CPI came out extremely low. However, when we look at the true data, there is an underlying issue which tells us that inflation truly is not doing too much. And the Fed had something specifically to say about this. And when we look at the charts on top of this, it seems like, technically speaking, there is something major about to happen, which we're going to discuss very quickly here in the video. But of course, before we get into that content, I have to ask you to do two things. Consider liking and subscribing every single day here on the channel. We go over the market for you and we break it down like we're about to do right now with this information about CPI and real inflation underlying and the ultimate move that will be happening very soon. Consider liking, consider subscribing. Let's get to it. Now, what we're looking at specifically here is going to be what is happening with inflation data. This is the CPI report. Now, we'll come right back to this. If we look at CPI month over month, year over year, major drop. Last month, year over year, 6% down to 5%. I mean, massive drop. The biggest drop that potentially we've had in last year and a half, 2 years. Incredible. We're getting really big movement right here on Nasdaq at the end of the day also. Now, we take it a step further. We look at CPI month over month. You can see stagnant, see core CPI, stagnant. These are the ones that matter. Remember yesterday I said core CPI more relevant than CPI, okay? Remember why. Remember why we said that and listen up. So that's where we're at. Now, when we come back in here to the charts and we go back to where we can look at what's really bringing inflation down. So this is on my Twitter. You can go check it out. This was posted at roughly 8:15, 15 minutes before market open. And if you look at this, it gives you an answer. So we can see basically negative is good. When it's negative on the chart, that means it's dropping, which means you have, momentum to bring down inflation, bring down the number. That's what you want to do. And where you're seeing most of this drop is energy. Gasoline right here, right? All the way back to September, negative 4.2, 3.4, negative 3, 2.3. December, negative 7 was a good month for us. Everyone remembers that. And then, here, again, another minus 4.6. So we're seeing if we lump all these together over the past, 6-7 months, and we look at really what's affecting us, the biggest drop in inflation has been specifically energy. Energy commodities, gasoline, fuel oil, pipe gas services, just utilities in general, okay? If we look at broad-based everything, food, very flat. You're seeing a slight drop, some slight drop here at food at home. Is very, very stagnant. Food away from home has continued to rise, but that's what's happening there. Now, if we take it a step further, it's a new step further, we can get a better look here. Let me zoom in. And this is Fed minutes, and this was on me. I just totally missed Fed minutes coming out today. Totally on me. Apologize. Sorry. So in the middle of the day, we mentioned that in the live stream today. So I always recommend that you check out the live streams. Now, this was the statement of statements. Fed minutes. This is what they said at the last Fed meeting. Participants agreed that there was little evidence of disinflation for core services other than housing. And this, I believe, is an issue. And I think we're finally peeling back the onion, if you will. And we're seeing what's happening underneath the surface with the Fed and some of the statements they're making. And I'm going to tell you now, if this is true, which we have to believe is true because the only thing that's really been coming down is gasoline, then I think there is a large urge for caution proceeding. Okay, we need to understand that. There's a large urge to be careful here. Because again, technicals are still disaligned from fundamentals, but fundamentally we're seeing the very big issues. Fed minutes, they also went into expressing what's happening with tighter credit conditions, weighing on the activity, hiring and inflation, which if we still look at that hiring activity, like what are we talking about? Jobs are still high. I will say jobs have been dropping lately, but they're still high, which leads us into tomorrow as well. And then the next statement, which the Fed mentioned this morning as well, is they projected a mild recession starting later in this year. And my statement to that is if we're expecting a recession later this year, what have we already gotten? Like what was the past 40% drop on the market? fun? I don't know. That's the question. Like, what do you like? Do we think? And I would love to hear your comments here. Do we think that the Fed is just kind of backtracking? Did they move too slow? You know, should they pause rates? Should they keep going? I would love to hear your opinion here. My opinion personally is that they need to pause, see what's happening, and then go from there. And that's ultimately why they should pause around 5.25 to 5.5, because then they still have another whole percent that they could raise up to 6.5 to 7%. Over 7% would be just detrimental to the market. But yeah, another big topic we were having today in Discord with me and Cajun was the idea that possibly going back into this core CPI and looking here, is you could argue inflation is becoming, or possibly already is, somewhat entrenched, right? Stuck, stagnant, can't move, right? Now, the only argument against this is that you're not seeing jobs relate to what's happening here. So once jobs start to drop, if jobs were to drop and we start to see unemployment rise and inflation stayed the same, core CPI, then that'd be a really big issue. Okay, that'd be a big issue. That would like confirm, you know, inflation becoming entrenched. So that's what we need to view and to identify. And I would love to hear, do you think possibly we're already entrenched? Would love to hear you there. Okay. Now, let's jump to the charts. And tomorrow, just so you know, I know tomorrow's like not even, I looked at tomorrow, like, man, just more and more. So tomorrow, before market opens, 7:30 Eastern, okay? Or 8:30 Eastern, 7:30 Central for me. Core PPI data coming out month over month, right? PPI is typically good. I'm going to tell you, PPI compared to CPI, if CPI beats and does well, PPI usually destroys and does really well. Just saying, over the past year. Jobless claims as well, so we'll get more jobs information. Now, we dive into Nasdaq, and this video is not going to be super long. We have a webinar in Discord today, so we have to get back there. Okay. Again, I know I probably sound like a you know, the little tiny violin from old SpongeBob, right? If we look at where we're at, you know, broken record, right? Broken record here by Tyler. We are still sitting at, this is February highs, the swing highs that we had after the last Fed meeting in February. Remember, really great run. We've made a lot of money there. We're holding above this level still. As long as we hold this level, I think you have to remain bullish. But what I will say is today you did make a lower low, right? So if we look back over the past like 3 days, if we come in here, you were making higher lows, you know, you were looking good. But overall, you couldn't jump to this thesis of I'm bullish. And then you kind of came back to reality and you're like, oh, well, look, I'm just in I came into supply. You know, nothing really happened here, right? It is what it is. You go into ES, we look at where we're at on ES, you know, nothing really happened here, right? ES, if we really get back to where we're at back here, you're just sitting, you know, right in this level again, right? Nothing has really changed. You know, this whole level right there, that's where you're sitting. You're just coming right back in up to 4,200. Nothing's changed. Possibly double top set again. If you break below lows here at 40.95, 40.96, the trade looks really good to the downside. Okay? So you have to identify and be able to say, look, both setups are there. Both setups are on the brink of playing out, right? We've had the opportunity outside, we just can't get it. But I'm going to tell you, you're getting closer and closer for that downside thesis. I will agree. Again, I'm not in anything, not taking. Today was I took like nothing today, literally nothing. So when we look, I had Tesla and I lost about $200 and that was a very small position, but yeah, got out of that once it broke below 187. But that's where we're at, and you have to understand where we're at and how we're moving. So again, if you break below 40.95 here on Nasdaq or on ES, you're in trouble. So really, I should be watching 4,100, but yeah. So if you break this, you would confirm the potential double top here, right? Confirming the double top, even though it's a little bit off. Don't attack me. You know, all you Karens out there going crazy like Tyler, it doesn't match the lines. If you break this bottom line down here, right at roughly 40.97 roughly, then I believe you're very bearish and you have a lot of downside potential. And we can also see that we cut through this like butter again. So, you know, next downside there would be close to 4,000, you know, 39.80 roughly, right? That would be your next target. That's where you got to look to next. So again, that's what we're looking at here. ES, Nasdaq. I mean, tonight it's going to be interesting. I'm not going to lie to you. I have been in no positions. If you would have broke down and held, I probably would have went short, but you're not. You're sitting on top of support still. And we also know ES and Nasdaq are, ES is holding up a lot better than Nasdaq right now. Again, we're seeing a little bit of a rotation. What's happening here? But we also have to be prepared because not only is PPI tomorrow, what's Wednesday? Or what's Friday? It's bank earnings, United Healthcare, right? Some of the biggest stocks, specifically one of the biggest ETFs in SPY, is going to have its day of reckoning. Either if bank earnings are going to set a tone too, because if banks have halfway decent earnings, which I agree. I know you're going to say, Tyler, how could they have decent earnings? I agree. How could they, right? But if they do, you have to be prepared for both cases, right? If they do, we could see SPY erupt, right? Because XLF, as we look at this, ETF, you're still down in the trenches, whether you like it or not. Okay? Understand that. United Healthcare, obviously, XLV, very big, very big impact on the Dow. And Dow has been performing. Dow has been trying to hold up, roughly all day. Right? Dow still looks like great. I mean, look at that parabolic run since March 16th, right? So understand that. Understand where we're at, how we're moving, and ultimately, potentially, where we could be going very soon with this movement. So again, we're at a very big inflection point. I don't think any cards are off the table. I don't think we have to run this way or the other way. Now, I want to go into two other points, and then I'm going to let you out of here very quickly, okay? One, we're going to look really quick at the options chain. We saw a lot of these come in. There was not a lot of downside puts coming in on SPY until the end of the day. And these are kind of aggressive. We have some for June. We have some very soon, that's obviously for, Friday. Pretty big there, I'm not going to lie. And then going into Qs, what we have here, not as many, nothing too big. Going into IWM, let's go really quick. IWM, a lot of puts flowing in here as well, mainly for December. Not the most interesting. We don't want to really care too much for the dated ones. The shorter dated ones are we care more about. But just know that as well. We still had some big ones right here. 616 for June, 200s, 4.8 million, still pretty aggressive. And then VIX, you had a lot more calls yesterday. Pretty lackluster today. But what I want to show you is Bookmap. And their link is down below so you can check them out. It's a level 2 data, basically visualized for everyone. I love showing these guys to you. But something was interesting today, okay? And again, I try to be as unbiased as possible at all times, okay? I have no position. I'm not in anything. Right, wrong, doesn't matter because I'm in no position, right? All that really matters is money when it comes to this game, okay? And as we look here, these blue lines, it's the icebergs. It's dark pool data, right? It's showing who's buying, who's selling, okay? The big orders. And so each one, you have lots, and lots represent, thousands of dollars. I think each lot's like worth $25,000. I could be wrong, right? I could be wrong. I'll post on Twitter later if you want to get the exact number. But anyways, about, 2,500 is millions of dollars, right? Okay. Now, typically, our lot size that we're seeing on these icebergs, a big one is around 12 to 1,500, right? These are almost double that. You have a 2,500, a 3,100, a 3,200, and then I didn't see these here at the end of the day because I honestly just got away from my computer, so I didn't trade anything like a ding dong. But you had more, 2,000, 2,000, 2,000, and 1,500 almost. Okay, so a lot, a lot of buying. I would argue this is one of the most aggressive buying days that I've seen on the dark pool data. I'm going to tell you right now, that is the most aggressive that I've seen. Potentially, I don't want to lie, but it guaranteed top 2 days that I've ever seen in icebergs dark pool ever. I'm going to tell you right now. And there's a very big underlying thing here. Okay. So this is why I want to say this right now. It's setting you up for two opportunities. I love what I'm seeing there, but I'm going to tell you both ways. If you start to break below 12.95 and you hold, same thing on ES for 4,100 and you hold below these key levels, I'm going to tell you right now, you could see some liquidations. You could see some volatility. You could see some aggression. And because those positions, if they get under the water, they're going to start bleeding. They're going to start hurting. They're going to have to start getting out of that position. Okay. So when I look at this, that's definitely something that we need to be watching. But it's worth mentioning. ES, as you look here in comparison to Nasdaq, which has not been the story, is making higher lows here. Okay. That's why I say you've got to watch the double bottom. If you break below the double bottom here from April 6 lows, then you're looking at the opportunity to go short to play the downside. Until then, you either are trying to grab a knife, play to the upside, or you're just sitting on your heads being patient. If you're like a swing trader, if you're scalping, do whatever you want. I mean, I don't really know what to tell you. But those are the big levels, okay? NQ, ES, these are your levels. And NQ, you're dangerously close. But we can even see here in the after hours, just when I was saying that at the beginning of the video, you drop down to 12.938, instant bounce. And this has been the story so far, right? I'm not going to try to predict if we're going to bounce or not. I'm not going to do that. I'm not going to throw my money and say, oh, well, our Father who art in heaven, please give me thy gains. Amen. Like that's not trading. That's praying. That's hoping. We don't do that, right? We try to create a strategy. We try to create a plan. And we try to follow that plan to the best of our ability and play the breakouts when we have the best opportunity to play them. That's my viewpoint. That's what I'm watching. Those are my favorite things in the market right now. I'm not going to mention any stocks that I love, right? But yesterday I mentioned a few big names I'm liking. Meta, obviously today you pushed up like 217, good run, awesome. Microsoft, you pushed up again today. If you go like something like the 5 minute, you can see you pushed up towards 287, good run, awesome, great. Tesla's one of my favorite names, but again, 187 is like the biggest line in the sand that there is. I bought right here at 187. I actually ended up buying at 188 once you bounced, and then I had stops at like 186.7, got stopped out, and thank God, and we just started dropping again, right? So 187, if you're below that, you're bearish. If you're above it, you're bullish. The end, gazpacho, that's it, right? So understand that. Those are like the big stocks I've been watching, and we're seeing some inherent weakness on Apple, which is also interesting that you're seeing so much weakness on Apple, but you're still seeing SPY hold up the way it is right now. So again, it tells me that if Apple, for instance, starts getting some love, starts getting some strength, start seeing this roll over back into SPY, and I think SPY and Nasdaq could bounce easily. That's why I say, you're seeing buying, you're seeing some of these underlying signals out there right now. There's no reason to be overzealous. There's no reason to be overconfident or rush anything, especially with tomorrow being news of PPI still and jobless claims, which have all been doing decent. With CPI doing decent, we bounced up 200 points immediately when CPI came out. Understand the movement that's still there and the volatility that will follow and ensue. I'll see you guys tomorrow. Have a good one, traders.